Seagate just closed the best year in its history. $12.2 billion of revenue, up 34%. $3.2 billion of net income, more than double last year. Management says pricing drove it. But run the arithmetic in Seagate's own tables, and the price of a terabyte of storage is lower than it was 4 years ago. Here is how both of those are true. Start with the calendar. Fiscal 2026 was a 53-week year. It ran 371 days against 364. Seagate discloses the extra week and then never quantifies it anywhere in the filing. Pro rata, 1 week is about $230 million, so roughly 2.5 points of that 34% headline is calendar, not demand. Comparable growth is closer to 31.5%. Now the volume test. Seagate shipped 789 exabytes of hard drive capacity in fiscal 2026, up from 595. That is up 32.6%. Nearline drives, the ones that go into cloud and enterprise data centers, went from 497 exabytes to 695, up 39.8%. Everything else shrank. Revenue rose 34.1%. Volume did essentially all of the work. So here is the price test, assembled from 5 consecutive annual reports. Revenue per exabyte shipped was $18.5 million at the fiscal 2022 peak. It fell 4 years running to $15.3 million, and it is $15.5 million now, down 16.4%. Alongside it, Seagate's own disclosed price per terabyte, $17, then $15, then $15, then $14. And in fiscal 2026, that row is gone. Price per terabyte appeared in 4 straight annual reports. It does not appear in this one. In the first quarter 10Q, the sentence introducing the table still promised price per terabyte, and the row underneath it had already been deleted. By the second quarter, the sentence was reworded too. So where did the record margin come from? Cost. Cost of revenue rose 12.5%, while revenue rose 34%. Divide cost of revenue by exabytes shipped, and you get what a terabyte costs Seagate to make. $12.98 in fiscal 2022, $8.41 in fiscal 2026, down 35%. Gross margin went from 29.7% to 45.6%. The split is clean. Revenue up 34.1%. Cost of revenue up only 12.5%. Gross profit up 73.7%. Operating expenses rose just $154 million, and $105 million of that was a legal settlement. Product development is $755 million against $941 million 4 years ago. Seagate spends about 20% less on research than at the last peak, and the record absorbed $256 million of charges. $105 million is Seagate's net share of a $175 million securities class action settlement. The class period runs from September 2020 to April 2023, exactly the window in which this business went from peak to a $529 million loss. The other $151 million is a net loss on retiring the 2028 exchangeable notes. Below the operating line, 2 things. The effective tax rate went from 2.91% to 13.73% as the Pillar 2 global minimum tax landed. Pre-tax income rose 143.9%, while net income rose 116.8%. So net income growth is understated by that, not flattered by it. And shareholders' equity swung from negative $453 million to positive $2.2 billion in 1 year. The supply side is where the durability question lives. Capital spending was $569 million. It more than doubled and is still only 4.7% of revenue, while exabytes shipped rose 32.6%. Seagate carries $2.1 billion of unconditional purchase obligations, $1.6 billion payable within a year. Item 1 says it agrees longer-term supply commitments with key customers. It never sizes them. One customer was about 14% of revenue. On valuation, and this part is market data as of August 8th, not the filing. Seagate traded near $813, a market value around $196 billion. That is 58.5 times diluted earnings per share of $13.90, and a 1.6% free cash flow yield. A scenario discounted cash flow on $3.1 billion of free cash flow gives $109 if the cycle repeats, $256 in the base case, $510 in the bull case. To justify $813 at 25 times earnings, you need $32.51 of earnings per share, about 2.3 times what Seagate just earned. The market is not paying for this filing. It is paying for 2 or 3 more years like it. Implied value understated assumptions, not a price target. The bottom line: Seagate did not raise prices its way to a record. It cut the cost of a terabyte by 35% against the last peak, sold 25% more terabytes, and let a cost base that has barely moved in 4 years do the rest. Watch nearline exabytes, cost of revenue divided by exabytes shipped, and whether the price per terabyte row ever comes back. A company that stops publishing a metric in the year it turns awkward has told you where to look. Nobody wrote this by hand. Every number came out of the filing, and the same pipeline runs on any of the 10,000 companies that file with the SEC. This entire analysis was built on the RoboSystems SEC shared repository. Structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.